Hello and welcome to the Open Banking Expo Infocus webinar series. In this episode of Infocus, we're looking at Pay by Bank and unlocking new use cases. I'm Ellie, Duncan, Head of Content at Open Banking Expo, and I'm delighted to be joined by Matt Jackson, Vice President of Partner Management at Token, Claire Haskins, Head of Revenue Operations at Ecommpay, and George Huntley, the Chief Executive Officer of the Money Platform. Now, during this episode, we'll be hearing from our speakers about their existing partnerships and how they work together before we go on to hear specifically about the Money Platform's adoption of Pay by Bank and how Pay by Bank compares to other payment methods. We're also going to cover some specific Pay by Bank use cases and consider how to encourage further adoption among customers. So welcome to the webinar, all three of you. It's great to have you here. Before we get stuck into the topic at hand, it'll be great to hear from each of you a bit more about your roles and a brief introduction to your respective organisations as well. So let's start with you, Matt.
Thanks, Ellie. Great to be here. As you mentioned, I'm the VP of Partner Management here at Token, and my team are tasked with helping our partners bring account-to-account payments into the mainstream. And that's what Token is here to do. We are trying to or growing to become the leading account-to-account payment provider globally. And we deliberately work at the infrastructure layer, partnering with banks and payment service providers to bring those account-to-account payments to bear to their customers.
Great, thank you. Claire, let's hear from you.
Thanks, Ellie. So Claire Haskins, and I'm Head of Revenue Operations, but don't let that distract you. I spend a lot of my time by choice working with customers frontline to create and deliver solutions. So that's very much my remit for this call. And in terms of Ecommpay, we are what the industry describes as a full stack provider. That means that we provide all of the services from the back-end card processing and acquiring through local processing through gateway. We are the only technology to have orchestration and open banking built in, hence this conversation. And we really differentiate by being interoperable, so completely open by design, enabling us either to support customers in a single stack, as I described, or indeed working with best-in-class specialists, whichever our customers prefer.
Great, thanks, Claire. And last but by no means least, George, let's hear from you about the Money Platform.
Thanks, Ellie, and excellent to join you today. My name is George Huntley, and I'm the CEO at the Money Platform, which is a peer-to-peer lending platform offering consumer loans in the UK with a particular focus on underwriting thin file customers who are underserved by mainstream banks. We started working with Ecommpay and Token IO about a year ago. And we've got a longer history of working with Open Banking, but we've been using Pay by Bank for, as I say, about a year now.
Great. Well, we're definitely going to hear from you a lot more about that today. First of all, Claire, I want to come to you. Can you tell us a bit more about that relationship between Token and Ecommpay, specifically the kind of features or the functionalities of Token that were most attractive to Ecommpay?
Yeah, absolutely. Thank you. So I think there's several things about Token that are quite distinct. The first is that they were very much one of the pioneers in both the development and creation of the UK and the European open banking framework. So that gives them a level of expertise and understanding which is relatively unrivaled. And on top of that, as Matt said as part of his introduction, they are also very much a network specialist. So they've invested really heavily in creating a very quality infrastructure, but therefore there isn't any conflict with us as a front-end provider and wanting to work with merchants. So it just works beautifully as a partnership in terms of the synergy and the offering to merchants. And that enabled us to also be able to provide a very deep penetration of bank coverage, both for our customers in Europe and of course here for the Money Platform in the UK.
Yeah, of course. And that brings me on to you, George. What specific capabilities of Ecommpay's platform were most appealing to the Money Platform?
Cool. So, yeah, we started using Ecommpay in conjunction with application that we made to the FCA to hold client money for ourselves. Previously, we've been using an EMI to hold our lender fund rather than holding them ourselves. And as part of that opportunity, we took the chance to review all of our payment infrastructure and find ways in which we could serve our customers better. And a key attraction for us, or Ecommpay, was being able to allow customers to make payments through, a myriad of different ways, and to cut the number of times customers get stuck and need help from us or from their bank. And Pay by Bank was a big part of that. And actually, they also work out cheaper for us, which is also handy, particularly by having Pay by Bank. Other attractions for us really of making that switch was being able to accurately track a payment through its life cycle on Ecommpay's dashboard, and being able to segment fund within wallets which Ecommpay have, and separate that between money that's due to our lenders and money that's due to us as fees, which was really important for ensuring compliance with those client money regulations, which we're now covered by.
Great, thanks, George. Claire, how does Ecommpay integrate with the money platform's existing systems and infrastructure then?
So we have a very clear philosophy. I mentioned that we are a single technology stack, and part of the value for our merchants behind that is that it's a single integration. And we wanted to expand and extend that capability when it came to things like open banking. So our integration into Token is also through API, but we then are able to deliver that back to our merchants through the same single integration that they use for whether it's our hosted payment pages or any other integration into our technology. So it makes it a very clear and single piece of operation. And that then enables Money Platform to be able to perform the functions that they require and to be able to create API calls into the system and to be able to disperse the funds in the way that George was describing.
Well, let's come on to talk about why Pay by Bank then. And firstly, it's probably helpful to establish what is Pay by Bank and how does it compare to other payment options. So I'll come to you on this, Matt.
So Pay by Bank is a payment method that allows consumers to pay directly from their bank account without the need to enter card details or open a wallet or even know any necessary information. It came about as it's powered by open banking technology, which was mandated as part of the PSD2 regulations. And as a payment method, it's on a really large growth trajectory. A report actually came out today from Open Banking Limited that showed a 40% year-over-year growth rate. It's still underpenetrated, and we all have really high hopes about how fast the growth is going, but the early signs are there.
Yeah, great. Claire, anything to add on that?
Absolutely. I think, as Matt says, it's a payment method in growth. And like every payment method, we've seen significant trajectory in that growth over time. We all will recall a time when cash was very prevalent, and increasingly we're going into stores and online, obviously, where cash is just not an option anymore. So there's been a huge shift towards digital funds and digital money, and open banking is very much part of that journey. As an acquirer, we could have taken one of two positions. We could have been very frightened about being disintermediated by open banking for eating the revenues and profits that we're able to take from card processing, or we could have embraced it. And part of the philosophy for Ecommpay was to embrace it and to bring it into the stable in order to provide our customers with that wider breadth of choice and to find the right payment methods for the right use case. And I think open banking provides exactly that, particularly to industries where they've traditionally seen very low levels of chargeback or demands for refunds. And so instant funding and the ability to be able to harness funds directly and, as George said earlier, at lower cost, absolutely have been key drivers. And so people like money remitters, other financial technology services, less so in markets such as travel or retail, where again you would see people looking for that chargeback protection or refund mechanism.
Yeah, of course. Well, look, George, I want to come on to you and find out what are the primary drivers for the money platform to adopt Pay by Bank as a payment method?
Yeah, so I think just to build on what Claire was saying, it seemed to us as though Pay by Bank was becoming more and more popular, and there were high usage of it by our underlying customer base. And so it was a natural step for us um, as an alternative to paying by card or other payment method. I think for us, like probably a lot of other firms, cost was a key driver. And as we scale up and have scaled up in recent years, payment costs have become an increasing part of our cost base. Pay by bank is a lot cheaper than card payments. And as we continue to grow, that will make a significant difference. I don't want to get away from that being a bit of a motivation for us. But beyond that, there are a number of factors that are quite important as well. So as a peer-to-peer lender, having a quick settlement time via Pay by Bank means that we can get money repaid from borrowers back to our lenders and back onto the platform to be lent out, which helps us increase the volumes that we can lend through the platform and helps ultimately drive actually better returns for our lenders as well. Historically, we have seen a small but not totally insignificant chargeback volume with fraud as the stated reason. And so Pay by Bank is more secure and reduces that risk of fraud. And that's important and attractive to us. And I think important and attractive to the whole industry. I think also, and I think Claire just touched on it just then, our support team we're spending more time dealing with customers who are having issues with their bank card, and having a range of different payment methods, with Pay by Bank being a key one for us, allows customers to self-serve and means that they don't have to necessarily contact their bank or contact the support team in order to make a payment through one specific route. So Pay by Bank, it's offered us a really cost-efficient, secure, and quite easy route for customers to make payments if they can't make them via the kind of old traditional routes. And it's been, really helpful to us.
If I may, sorry, Ellie, if I may, what we've also been able to support Money Platform with is the extra functionality. So we've taken the traditional and standard account-to-account payment processing and then bought our expertise from an acquiring perspective. That's also part of the benefit and opportunity we have in our relationship with Token. And what that's enabled us to do is facilitate payouts, which is not currently part of the A2A infrastructure, also to be able to support refunds. So looking at the Money Platform's account overall, about half of their transaction value is in payouts and half in what we would call pay-ins. And if you then look at the pay-ins mix, you can see a growing trend towards the increase of open banking. So about 40% of the transactions are moving towards that open banking piece. So you can see it on both the inflow and the outflow in the account.
Yeah, that's really interesting. And Matt, I wanted to find out from you a bit more about the role that Tokens technology plays in the Money Platform's Pay by Bank implementation. Can you give us a bit more of an idea, please?
Yeah, I think the best way to conceptually think about it is to view Token as a silent infrastructure that is just one element of the Money Platform's integration to Ecommpay. Having worked with Ecommpay over the years quite extensively, I know the time and effort they've spent in developing their platform and maintaining really high quality integrations, of which Token is one of them. We've similarly spent loads of time and effort in going and doing really high quality integrations to the 90 UK banks. And through that integration pathway via API, the Money Platform are able to leverage that capability of account-to-account payment infrastructure and the extra bolt-ons that Claire was talking about there in terms of payouts and refunds, on top of everything else that Ecommpay will be providing to the Money Platform. That effort isn't, a one and done. So we both, and I'm sure the Money Platform as well, continually invest in maintaining that integration to the highest quality standards, which helps boost conversion rates and stops the type of support tickets that George was talking about there, where there is a technical fault causing an issue for the end consumer.
Great. Well, look, I wanted to just dig down a little bit, George, into some of the kind of benefits that you've already talked about that Pay by Bank offer. But I'm looking to hear about the specific advantages that it offers over traditional payment methods for your money platform customers.
Sure, yeah. So I think there's a range of different ones, Ellie. So I talked about some of the benefits for us as a platform, so lower costs, less fraud risk. Uh, and I think one of the ones that's really helped our users on the pay-in side is that quicker settlement speed. So helping moving money from borrowers repaying their loan back to the lender so that they can either re-lend out the money or withdraw it if they want. Also, lenders depositing money onto the platform, being able to see those deposits quickly put to work and lent out on the platform is really helpful. Customers, as I touched on a moment ago, customers having another route to make a payment, and I think that saves them time and helps them be able to make payments quickly to repay loans, which is really helpful. Also saves us time having to deal with those support tickets, like Matt just said. I think one other key thing for us and for our customers really has been customers being able to see their loan payments go through instantly, and so on our system we're able to mark their loan or if they're a lender the payment that they've uploaded as having gone through instantly. And that means that they can get visibility that the loan has been repaid or the installment for the loan has been repaid, and that can give them some reassurance that they don't have additional payments to make. And also, I think it's actually one of the bits of feedback we've had is that it's helped customers to budget better. So, if you compare it with direct debit or with card payments, which might have a multi-day settlement time, when the payment leaves your bank account instantly, the customer can see exactly the amount that they've got left in their account. And so they know, oh, sorry, my lights have just gone off. They know exactly how much they have to get through to the next payment date. I'm just going to turn the lights back on.
Yeah, that's a really interesting feature actually, isn't it, Claire?
100%. So the confirmation of payment, the receipt of payment, so the confirmation of payee, the receipt of payment, and the instant funding are definitely characteristics that are attractive to companies like Money Platform for not only their own benefits and assurance, but also for their consumers and for their customers. I think it all boils down to what I describe as the big C, and that's convenience. And that's exactly the same when it comes to an individual or consumer looking at an open banking transaction. I don't have to walk to my handbag, find my purse and dig out my card. I don't have to remember a 3-digit CVV, card verification value. I can simply connect to the payment and authorize it in an app that I am both familiar with and confident in. And that just gives me the ability to move really quickly in pretty much any environment that I find myself. And so that convenience factor is also a massive driver across all industries for consumers wanting to adopt open banking and being comfortable in making the payments in that way. So we are also seeing that increase in trend and in adoption right across our customer network.
Mm-hmm. Yeah, that's great to hear. And George, I'm going to ask you to delve even deeper into, I guess, the specific scenarios or use cases where the Money Platform sees Pay by Bank being most beneficial for its customers, who are typically thin file, right, as you've mentioned previously.
Yeah, that's right. Yeah, so most of our customers are kind of young people in their 20s, maybe early 30s, and they're thin file. So that means that they don't have a credit history or a large credit footprint in the UK, and so they might not actually have a debit card, or they might have a debit card with a bank that doesn't give them a physical card, but just gives them something that they can use on their phone, for example. So we have had a number of customers who've actually really struggled to pay historically by card, and so having open banking, having Pay by Bank has been really helpful for them. But just to answer your question, Ellie, and go into a couple of of examples of how it can really help our customers. And thinking about some of the borrower customers, I think being able to make a payment by bank and see it leave your account, and see that payment repay a loan instantaneously, or repay an installment for a loan instantaneously, is a cleaner journey than needing to wait for a card payment or direct debit to settle into the account. And as I think I mentioned a few moments ago, we've seen customers say that helps them budget more effectively. So we've seen customers say that rather than having to kind of estimate how many payments they have through a month, by being able to go and log on and make a payment themselves and see that payment come out on a given day, that allows them to have more control over their finances than if they've got a direct debit that might come out on the first of the month but might not show in their accounts on the money platform until the third or the fourth of the month. So that's something that I think we've had some tangible feedback about how it's improved customer outcomes. I think another thing, just focusing again on those borrower customers, has been they can self-serve without potentially having to wait for a support team member to come back to them or needing to call their bank. So historically, when we only had one method of making a payment online, which was by card, we found that we had a huge number of customers that would call up because their card wasn't working, because our card system didn't accept that particular bank identification number, or their bank might block the payment, and so they would need to call their bank to unblock it, and the bank might pause their card or something like that. So being able to have two different routes or multiple different routes by which customers can serve themselves and make a payment online has been hugely helpful. And when we're dealing with loan payments, that's particularly pertinent, because we know, and we've seen data that actually it's not always the case that customers don't want to pay their loan installments or can't pay their loan installments. A big reason why they may not pay is just because there are blockers and barriers in the way of them being able to pay. And we want to completely remove those barriers, and having multiple ways in which customers can pay is a way of removing those barriers. So for example, customers wanting to make payments in the evenings or on the weekends when our support team might be more limited or stretched, being able to self-serve, being able to have a completely different payment rail has been incredibly useful for those customers. So yeah, hopefully that helps answer your question.
Yeah, absolutely. I think it definitely brings home that point about convenience that Claire, you referred to as the big C earlier. I mean, Claire and Matt, I wanted to pick both your brains on, so are there any particular types of transactions or customer segments where pay by bank is proving to be especially effective, do you think, just building on what George has already said? Claire?
So I'm a massive convert for open banking, and very much an advocate. And I think that therefore there really isn't a sector where it isn't applicable. I mentioned earlier that we haven't seen huge adoption in the travel space. That's totally true, and that's because and we've all experienced this with the volatility, shall we say, of flight cancellations and hotels, etc. You don't see the same adoption when it comes to the main payments, but we have seen adoption in travel for deposits, where they're non-refundable and they want a quick mechanism to be able to kind of secure that opportunity and that payment. So we are seeing it expanding and growing right across the different verticals that we support. And it's been predominantly led by those financial services companies like the Money Platform, where there is not only a wider audience or an increase in addressable audience that they're trying to target, but also to create backups and alternative mechanisms for payment, and also to be able to really drive forward those payments where the immediate notification that the transaction is complete is key, and the funds are collected in the same time. there was a piece several years ago when contactless first came in, and it wasn't processing transactions in real time. It was processing next day, about student remorse, because they would spend in the union on the one night and then have it hit their bank account the next day. So that kind of experience and knowing your funding really does translate through, and is very much driving adoption across all of the industries that Ecommpay work with. So very broad would be my short answer.
Yeah, yeah. And Matt?
Yeah, I'd really tend to agree with Claire that I don't think there are many use cases where account-to-account payments couldn't play a really significant part in the payment mix going forward. Historically, as Claire points out, we've seen that growth in financial services, settlement of credit cards, settlement of loans. Token ourselves have seen some really interesting use cases where credit card companies are introducing intentional debit card friction. One of them has introduced so much that if you want to pay by debit card now, you have to phone them, because they recognize the benefits that account-to-account payments bring for them as the business, but also for the consumer. And that is driving adoption, and we're seeing that trickle effect of, as consumers become more aware of how open banking works, how safe it is, and the benefits that it might bring, that's bleeding across into other industries. I mentioned the OBL report that came out today earlier. One of the facts that jumped out to me from that was that e-commerce traditional retail transactions are growing at 500%. And that's relatively recent, and definitely recognizes that they were starting from a very small user base to start with. But I think we're starting to see that move in the adoption cycle, certainly to early majority from early adopters.
Yeah, we're seeing it in every tender and RFP request that we receive now. It's a fundamental part of the requirement. It's something that every industry and vertical is looking to incorporate and understand the value of, but they are also looking for those advanced features now. They don't want to have to wait for them to come. So again, that's been a really big cultural shift in the business market as well.
Mm-hmm. Yeah, well, let's talk a bit more about adoption then, because we've heard a lot about the benefits, but as always, the proof is in the pudding. So, George, what percentage of the money platform's customers are actively using Pay by Bank? And among those, what has been their response to the offering?
So I think, Claire might have more up-to-date data than me. I think in April, about a third of our payment were made via Pay by Bank. And we've made it the default option for customers who log in and make a payment. And as I said at the beginning, the money platform, the TMPR focus is on thin file customers who are typically young. So a lot of these customers will have started their financial lives in the last few years, and Pay by Bank will be no stranger to them than paying by card. And so in a sense, it's not that difficult for them to get used to it. I think it's fair to say that we have found with some customers there has been a period of adjustment, particularly if they've got their cards saved down on some kind of system which autofills into a payment method. But I think we're increasingly seeing that customers find Pay by Bank pretty straightforward. As Matt just said, sometimes actually paying by card can be quite challenging and difficult, and banks can block payment and make it more challenging for customers to pay by card. And so paying by bank, in a sense, it's becoming more mainstream. And as customers get used to doing it, it's becoming more and more popular as a route. We still offer customers a range of different ways of how they can pay, but Pay by Bank is now our default method for customers logging in. And yeah, as I said, a third of payments are going via Pay by Bank, and pretty much all of those customers who do log in do end up paying by bank because it's fairly straightforward and fairly seamless.
And Claire, just wondering if you had anything to add on that, but also an additional question really. Does this translate to sort of increased loyalty among the money platform's customers?
So my yes is the short answer, and I would my evidence for that would be that, as I was saying earlier, if you provide customers with a mechanism that is both easy for them to adopt and has value for them, never mind the value it adds for the money platform, which is also critical, of course, then that will be a reason for them to want to buy again or to recommend or to drive adoption of the services. So not only does what the money platform offer, not only is that unique to customers and very inclusive in the financial market, and again, that was culturally an attractor for Ecommpay of working with money platform, that financial inclusion. But it does mean that those customers are typically more loyal, and typically, as George said earlier, it's not the propensity to not want to pay, it's wanting to pay on their timescales, in their way, when they can prioritize that focus. And sometimes things just slip down your inbox if you're waiting to kind of action something at a later time. So there's very much that kind of positive user behavior, and that does drive both the loyalty and the increased recommendations for additional people.
And how are you encouraging adoption among customers that are yet to try Pay by Bank? Claire and George, I know you mentioned before, sort of making it the default payment option. Any other approaches that you use, George?
Yeah, so we're making it the default, and I think we're trying not to really overthink it just now. We're trying to kind of give customers all the options that are open to them, but making Pay by Bank the default is certainly what we're currently doing. I think also giving them some pointers, and explainers as to what Pay by Bank is, why it might be better for them, and how if they drop off at some point, having some help along the way that can help them get back on track and get the payment over the line. Hopefully, I think as adoption rises across a range of merchants, I think Matt and Claire were alluding to how popularity levels of Pay by Bank are rising. Hopefully we'll see fewer and fewer customers choosing not to pay by bank. But right now it is the default, and most customers are paying via bank without any issues. And so we don't really need to do too much to encourage adoption. As I said earlier, most of our customers are young, and so almost all of them have a banking app on their phone, and so it's pretty easy if they're using their phone to pay. It just takes them into the banking app, and they know the banking app, as Claire said, and so they're happy to pay via the banking app. And so it's actually hasn't been a big problem for us trying to encourage adoption.
Almost second nature to that sort of demographic, I guess. Matt, anything to add in terms of signposting people to Pay by Bank and using it to kind of generate that loyalty?
I think the key thing from our point of view, playing at that infrastructure level, is just really ensuring quality. As a new user, if you're trying something out for the first time and it fails, it only increases the likelihood that you won't select that payment method next time. If you have a seamless experience the first time, you will recognize Pay by Bank, maybe on the money platform, and then maybe you go to buy a pair of shoes or something. You'll see Pay by Bank and recognize that good experience that you had. As Claire pointed out at the top, it's taking you to a familiar app with your mobile banking app. So if you can get it right the first time, you stand a really good chance of enabling that consumer to choose Pay by Bank multiple times after that. So from our point of view, that's quality. We work really closely with industry on making sure that we are future-proofing the regulations and making sure that we have a say in future features that will be announced. And I know we'll talk about variable recurring payments later, but at the level Ecommpay, at the infrastructure and industry level, for us, it's all about maintaining quality and making sure we can influence the future path of account-to-account payments.
Yeah, of course. Well, let's talk about those kind of next steps and look to the future then. So, George, what are the money platform's plans for Pay by Bank in partnership with Ecommpay and Token as you look to the future?
Sure. So we want to make things as easy as possible for our customers, and for lenders, I think we're actually only offering Pay by Bank currently to our lenders. But for borrowers, one of the things that they like is for us to be able to process that payments for them without logging in. And so VRP, variable recurring payment, are going to be a big part of that. And I'm really excited about trying to move forwards with that over the next few months, and trying to be able to put more payments through Pay by Bank through starting to use VRP. I think there's a lot of benefit of VRP from a lot of different angles. I think we've talked about how it reduces costs for us and the risk of fraud for us and for customers, and those settlement times getting cut, which is good for our lenders and also for our borrowers. But I think another benefit is on the regulatory side, and I think the transparency that we'll be able to provide to our customers through VRP will be really good.
Claire, did you want to add to that at all?
Well, VRP has been the diamond in the open banking crown since its very conception. So yes, that definitely will be the enabler for those recurring and subscription payments, which will take away the friction. So that's definitely a key characteristic. I think there are two others that I would call out. One is potentially for the Money platform as it starts to look beyond the boundaries of the UK. So one of the things that is very strong within the token infrastructure is the ability to deliver localized bank accounts across Europe. And we've seen significant improvements in acceptance rates for other merchants where there is that local bank account, because some of those declines that George was describing from a card transaction perspective happen in open banking when somebody is operating from outside of the domestic nation. So that's definitely an opportunity as Money Platform looks to its expansion plans and thinks about where next for its customer base. And then on that theme, I think the other is, where does the evolution of open banking go? As a bit of an open banking nerd, there's a lovely definition of why account to account was the original scope and who was in line for that. And if you look on a fast forward to open finance, broadening out to wider industries, insurance, pensions, and then on beyond into open data, so health, wealth, and transport and the wider industries, I just think it provides a much richer data set that will enhance all the customer experiences and really bring that payments journey together. So I think there's things in both the immediate horizon and the longer term for both the Money platform and for merchants to think about.
Yeah, if I can come in there, we've been thinking long and hard over several years now about how we can get the most up-to-date data on a customer's situation, be it their income stability or who and what they're borrowing from, and who and where they're spending their money with. And that's really important for us in assessing someone's credit risk, particularly someone who hasn't had many loans before, trying to work out, what subscriptions they have and whether they're good at paying these subscriptions. Open finance more broadly will help us to go further with that and to be able to underwrite customers that currently we can't underwrite. So I'm really excited about seeing where the industry goes with open finance.
Yeah, absolutely. I mean, there's so much untapped potential. And Matt, my final question to you, I suppose, is, will we see Pay by Bank become a mainstream payment option in the UK among merchants and their customers? And so what will it take to get there?
I think time is the biggest one, so it won't surprise you that my answer would be yes, we will see it become mainstream. It is a case of time, and I spoke about the movement along the adoption curve earlier. I also think there's really exciting things coming. So when VRP fully launches in Q3 of this year, that will answer a lot of problems around those recurring and subscription payments, and the ease of use in adapting the rules around those payments, I think, is going to be a game changer. Direct debits are great to set up and, have been going for decades and still continue to grow. But if you want to adjust the direct debit, it's still quite a manual process. The UX that VRP will bring will give a really good alternative to direct debit for the first time. You'll have noticed that we've spoken about account to account. as the payment method, and not just pay by bank. Pay by bank is a subset of account to account, and so I think we will continue to see growth in the wider account to account payment space, and that might mean different branding, different terminology around it, but still that use case of direct movement of money from one bank to another. And then looking further forward, in the account to account space, we will see at some point new forms of money. So stable coins for cross-border flows in B2B payments are massive at the moment, and it is inevitable to me that they will form part of people's daily life at some point in the future. That isn't on a 10-15 year time horizon. For me, it's much shorter than that. So the whole account to account payment space is really interesting. We're doing everything we can to accelerate the time, but time will be the number one factor of that adoption.
Well, thank you so much, all three of you, for joining me on this webinar. I think it would be great to leave our audience with sort of one final sort of takeaway from each of you. In under 30 seconds, if you will. Claire, what's your key takeaway for those watching this webinar?
That this is a continuous evolution, and don't ignore it, don't underestimate it. Open banking is here and going to continue to expand, but you need more than one thing in your stable.
And George?
Yeah, well, maybe if I can leave you with a different thought. I mean, we thought a lot about consumer duty over the last few years and how we can put our customers' needs first. And I think for us, Pay by Bank has been a big part of that. And I'm looking forward to continuing to use that through VRP and through other open finance technologies in the future.
Great. And that, I'm going to leave you with the final word.
It's hard to come up with something original after a couple of great responses there. But I think for anyone listening, I would encourage you as a consumer to go and try Pay by Bank. There will inevitably be ways for you to do that. And, you know, if you're listening to this webinar, there is a very high chance that you are financially very literate and payments very literate. And I'd encourage anyone who hasn't to go and try leveraging an account to account payment and working out the flow and understanding the benefits for you as a consumer as well as the business that you're paying.
Yeah, that's a great suggestion. Well, thank you so much, George, Matt, and Claire, for joining me for this webinar today. We really hope you've enjoyed watching it, and we hope you've learnt a lot about Pay by Bank. If you didn't already know what it was, hopefully you've come away with a far better understanding. And also, we hope that it's enlightened you in terms of potential for use cases and how to kind of generate that sort of customer adoption as well. So thanks very much for watching, and we'll see you next time. Goodbye for now.
Thanks.
Thank you.